going? I'm Brad, and this is the No Bull Precious Metals Report, coming to you live almost every day, and hopefully providing some context to the world of precious metals, silver, gold, and all the other ones that are out there. So today is Thursday, June 10th, 2021, and one of the things that we've been waiting for all week are some of the economic reports to come out. So let's dive right in on this. Take a look. On today's schedule was the initial jobless claims report, the continuing jobless claims report, the consumer price index, the core consumer price index, business formations, and of course household wealth and federal budget. The big ones are really going to be those first four, though, and they're going to really set the tone for what's going on with everything going on in the economy and the markets and everything else. So jumping right in, we can see that the initial jobless claims went from previous month was 385,000. Analysts were expecting 370,000. And we wound up kind of cutting in the middle of that with 376,000, which again, that's still a general decrease down since January. Still not great, but still moving right along. The more troubling aspect, though, is that that nagging continuing jobless claims, because these aren't new people that just got laid off. These are existing people that are still claiming after all this time. And the previous period, we had 376 million, but we wound up taking 260,000 back to work, which gave us 3.5 million that are left on the continuing. And of course, as we know, that lags by about a week or so. The other challenging aspect of all of that, that kind of throws this into context, is the job openings report, which came out. And the interesting part of that, which I was going to drag into this, but I decided against it, was that the numbers for job openings also corresponded almost perfectly with the numbers of people that are actually leaving their jobs. So there's kind of a weird employment situation. And the reason I bring this up in like a precious metals report is that it drives a lot of consumer demand. It drives economic factors, everything else. So as we start to look at that, it's always good to keep it all in context. You have to look at the bigger picture of things in order to understand what's happening at the smaller level. So that kind of goes along with, the consumer price index and the core CPI. Previous month, we were at 0.8% on the consumer price index. Analysts were expecting 0.5. We hit 0.6, so they were off on that one. Go figure. With core CPI, kind of the same thing. Last month, we were at 0.9. This month, we're at 0.7. Analysts predicted 0.5. So that kind of, hit in the middle of things. What that means is a great question. But one of the things that we can look at is this 10-year Treasury yield, which I've brought up before. And this is a 3-month view of really kind of the baseline of what the interest rates are gauged off of. And this is really an interesting kind of a line that's going on, because one of the things that we saw is early on, early May, we were seeing kind of this spike into the high sixes, 1.68. We were seeing it as high as 1.7 within that. But we also saw within just, a few days prior to that, we were seeing dips on the low end of it, 1.4, and then closing out about 1.56. So there was a lot of fluctuation, a lot of variation that was going on. But for the most part, we were riding right around that average median line over the course of the 3-month period. Now, as we start getting into June 3rd, we kind of touched it for the last time, at least for right now. And you can see that we're in a steady decline. And even with the most recent number today, we're at 1.49, which again, that's kind of contraindicative of what's going on, because we're seeing price increases, but we're not seeing the Treasury rate increase. So, what does this mean for the big swirling mass that is gold, silver, precious metals, foundational currency, all those good things? It's a great question. We're kind of in economic uncharted territory, and no one has the answers to it. We can all make guesses, and any commentator that you hear that's talking about this that says they have the answers is frankly full of crap, because no one really knows. That this is unprecedented. We're definitely in this whole black swan event area of the economy. So the best we can do is just kind of watch, keep track, and hold on to our seats and hope it doesn't get the better of us. But as we look at the general market itself, we can see where things kind of fell for today, based off of all of these factors going in. We have a lot of green on the board, but not a significant amount of green. I mean, the green that's there is, it's sickly booger green. It's not, nice lime, bright green, highlighter green or anything like that. So we've only got a few things like, cocoa, that's doing pretty good today. However, as soon as we start getting into, gold, silver, platinum, copper, palladium, I mean, it's generally a mixed bag. We're seeing gold and silver, that they're running about even, although silver is up a little bit today, which I wasn't sure of where it was going to fall when I first woke up this morning and looked at it. Gold is still kind of hanging in there. It's not really moving that much. It's hanging right around that 0% line, day over day. Copper and platinum are down. Palladium's much more even keeled. So going into the actual assessment of things of where gold and silver are, as we start looking at this, we can kind of see, there's a lot of variation here. So let me bring this up, and we can start to look over the last couple of days. I mean, this has just been, there's a lot of movement. I mean, we had this low point that went all the way down, 2747 as a low. And I mean, now we're riding 2802. So there's a wide berth there, and especially on a commodity that's priced sub 30, that's a lot of movement for one day. So there's a lot of uncertainty in the markets, and that's something that could either push it up or push it down. And right now, it's definitely starting to push it up further. So as you can see on the 5-day, we're riding. We've got the +1 and the +2 standard deviations, and we're riding pretty well above the +2 on the 5-day deviation. If we start looking at the previous day, that again, we're still riding higher, and the current day we're definitely riding higher. So all of this is really showing that it's a strong market. The market is pushing forward, and I mean, despite everything else, volume is showing that it wants to be a little bit higher. So we go from there, and we start looking at what gold is doing. And gold is kind of the same way. We had this declining action that was going through. Let me just reinforce this quick. And we had this declining action that was pushing down, all the way from there and over there. And we had that nice little channel that formed. And then all of a sudden it popped. So that was interesting, but now we've kind of reversed those fortunes, and we're definitely, on an upward swing as we go through this, pushing up from there, going up, going over. You can see that we're starting to wedge it a little bit. So where that'll move, that's a great question. But as we start looking at, say, the previous day's VWAP, again, the 5-day is much higher. The previous day really pushed lower, and it was that action that was right down here. The intraday, again, we pushed low, and then we're almost riding the two bands. So, and that's an interesting way that this kind of falls, and it's not something that's planned or calculated, but it's just the dynamic nature of the markets. Is that you've got the actual VWAP from the 5-day, you've got the -1, then you've got the -2, and we're finding that the previous day and the intraday are both riding at exactly those levels, which is kind of interesting. A nice little statistics nerd type of thing. If we shift our focus over the volume, we can see a little bit more normalcy that's returning. As we had seen previously, I mean, we had that big gold spike, and now we've got point-to-point gold spikes, and as we're going through, we expect to see more gold trading, gold trades, um, in comparison to silver and comparison to copper. There's generally a lot more activity, and I was a little bit concerned because the levels that we were seeing earlier in the week were a little bit low. But now we're actually starting to see things they're kind of picking up and making a lot more sense. Um, so again, as we start to look at this, there isn't anything that's really pushing out. Although we are starting to see a lot more of the copper pricing that's starting to come through here. We're seeing some of these, and especially some of this copper that's pushing the pricing up and down respectively. But again, I mean, it's a pretty good distribution right between that negative 0.5 and the positive 0.5, and that's really what we kind of look for, is this low grouping, probably up to like the 100K mark. You expect to see that the negative 0.5 to the positive 0.5. So shifting over into retail, which is where more activity is coming in. Kind of the same thing. We're seeing some slight price declines. Comparatively speaking, I'm not going to spend too much time on the bar chart here. But the interesting thing is previously we had seen June 7th was about when we had last seen the same price level. And we were at about 2145, I think it was. So at 2030, we had an average price of 3340 with a median of 3358. And right now we're at about the exact same price, and we're currently at 3325 and 3346 median. So the prices are really kind of the average price is down off of where it was, which definitely kind of reinforces what we've always talked about with especially this market to retail pricing. And we're seeing that the prices have always tended to lag the directions. The retail prices don't tend to advance. So going through that, we start to notice that that those prices over time will have an effect, and that's where kind of those macro movements come in. The premium either declines or it increases, and then we see, like we saw over the weekend, with certain adjustments and things like that. So right now we have some interesting things going on with Silver Eagles taking a dive. There's a general price decline on that, which I didn't notice previously. But let's take a look here at the American Silver Eagle price and see. And yeah, that's absolutely true. We're seeing a decline in the price. So some interesting movements there. It seems that there's some price pressures coming out. They're actually declining those. So if you're in the market to buy, I'd say keep an eye on those pretty quick. As we move over into gold, though, again, kind of the same thing. We're seeing a little bit more of that pronounced hump that's coming over the various bars here between the 3 weeks. Although we are starting to see some appreciation on price. We can see that from earlier today, 8:30 this morning. The average ounce price was 1957. It's now up to 1974. So if you happen to get to your LCS early, pick up an ounce of gold. Right now, you've just made an extra $20 ish, give or take, and that keeps on going up. So just something to think about. The way that gold is moving right now is that it's actually doing pretty good. As we start looking at the market to retail, we can see the gold buffaloes are definitely not moving as fast as everything else. They're declining. So if you're in the market for a generic gold buffalo, it's never been my thing, but some people dig the designs. You know, if that happens to be you, you might be able to find some good price action on that. And just looking quick at the regression, just to see how this is all moving out. Over the past 90 days, we can see pretty straight line. If we back that off, just looking at 2 weeks, we're still seeing that straight line. So we're not seeing too much that's going crazy there. If we start looking at the gold eagles, we are starting to get some good movement up here at the top end of the retail spot variance. You can see that by the red. And where's that buffalo at? Let's take a look at the gold buffalo. And yeah, definitely we can start to see this this flattening of things that go across. So that's definitely something to look at and you know, pay attention to. So that is the precious metals report for June 10th, 2021. If you like what I'm doing, I encourage you to subscribe, like the video, leave me a comment. If there's something that you want to cover more in depth, if there's something you want to hear me talk about a little bit more, feel free. But yeah, definitely share it around, and hope to catch you next time. Thanks.